Hello everyone and welcome to Quantified Models. We are introducing a new service within the company, namely the rental of trading portfolios from Quantified Models. I want to congratulate you on your decision to explore renting trading portfolios. Renting trading portfolios can be an excellent form of investment. However, there are several aspects that you should consider before deciding if it is a good option for you. Throughout the presentation, I will share all the information that I think you need to know. Our strategies and portfolios are constantly monitored and evolved to provide the best results for clients. We've also had some strategic failures. We're not perfect. We will share this knowledge and experience so you can make renting through Striker work best for you. Please note that this presentation is for educational purposes only and does not constitute personal advice. Trading involves risks, including total account loss, and is not suitable for everyone. Here's the disclaimer. I recommend reading it carefully. What is trading portfolio rental? Renting trading portfolios or trading strategies is a subscription service much like Netflix or a mobile phone. You are charged a monthly or sometimes annual subscription fee. You are provided buy and sell signals for the strategies or portfolio every day, and you execute them in your account. There are different modalities. Manually execute the signals, authorize a third party such as a broker to execute the trades for you, or use automation tools such as a signal copier that executes the trades. We recommend that in order to trade without stress and more confidently, get the trades executed through a third party, meaning authorizing a third party like a broker to execute the trades for you. This eliminates the hassle of having to execute and check each trade to see if they have been executed correctly. Trading can cost you. Any contingency in trading can cost hundreds or even thousands of euros, and I think it is much more practical to delegate this part to an expert who monitors the execution of your trades. What are the benefits of renting a strategy portfolio? The first benefit is that we take advantage of the skills of others. You already know that learning to create good strategies can take a long time, often many years. Many traders still cannot create solid trading strategies even after years of effort. By renting, you can save yourself a lot of time and frustration by capitalizing on the skills of other traders who have already worked on this. All for a considerably small fee compared to the time and effort it would take to develop the strategies by yourself. Furthermore, even if you know how to develop strategies by yourself, you can save a lot of time by renting other strategies to diversify your portfolio. Secondly, instant diversification and exposure to other markets. You already know, and many from experience, that having a well-balanced portfolio of strategies across many markets is typically a way to consistently generate results with drawdowns, the lowest maximum losses. However, it can take a long time to build up to that level of diversification. So by renting a portfolio or strategy, you already get that instant exposure to other markets or sectors.
What do you want on gold?
The gold market, well, you rent a strategy or a portfolio that contains gold. Third, you control the strategies. This means that with the strategy rental, you can control when to activate and deactivate the strategies, and it is when you want it. If the portfolio does not meet your objectives, you turn it off. Fourthly, it works with any account size, even small accounts. Hedge funds and CTAs typically have a minimum investment size that may be too large for some traders to access. With renting a portfolio, you can start with a small account, trading micro contracts, and as the account grows, you will later use larger contracts. Fifth, you have no tenure. With leasing or monthly rental strategies, you only pay for the month in which you have subscribed and can withdraw the funds at any time. Sixth, the rates are fixed. Rental rates have a fixed cost that is based on the number of contracts we negotiate with each strategy or portfolio. And you know in advance, performance fee commissions do not apply to the rental. Therefore, if you are renting a strategy or a portfolio that has had a month with very good profits, you keep all the profits minus the rental fee and the execution commissions of each operation logically, but all those profits are for you. And seventh, real-time history verified by a third party. The results of rented strategies or portfolios are usually published in real time. Additionally, results are usually published by a trusted third party such as Striker, so you don't need to rely on strategy performance reports from the developer, which can be misleading or inaccurate. What are the disadvantages when renting a trading portfolio? The first is the mystery of the black box. When you rent a trading strategy, since you are not provided with the logical code of the strategy, you will not have an understanding of how it works, or under what conditions it operates, or why it performs operations, or when it exits or enters the market, or how it controls risk. There are many factors that contribute to a trading strategy. The trading strategy designer may share some clues about the strategy, and you may not even care how the strategy works if it makes profits. But it is often difficult for traders to trade strategies that are not performing well when they have no idea what the strategy is doing and why. Understanding the strategy can indicate when it may not perform well. For example, does the strategy work better in a trending market, but the market is not currently trending? Performance reports can give clues to certain aspects of a trading strategy, but without gaining access to the logic or code of the strategy, you can never be sure. The second disadvantage is that we do not have knowledge of the strategy design process. When you buy a home, you want to know that the builder used industry standards and best practices to build your home safely and to a certain level of quality, and that they didn't take shortcuts to get quick results. Unfortunately, when you rent a trading strategy, you often have no idea what processes the developer used to build the strategy. Did the strategy developer use industry standard robustness testing procedures to validate the strategy? Or did they simply over-tweak the strategy in the hopes that it would work? Some strategy developers may explain a little about their process, but often they won't go into detail, as part of it could be their special secret. While this isn't necessarily a bad thing, you can never really know. The third drawback is limited support, as some strategy developers who lease them often don't offer support and don't even publish their names or contact details. So, if problems arise or you have queries, it might be challenging to get help. And the fourth disadvantage is you control the strategies. Having the ability to toggle strategies on and off may seem like a beneficial skill, but it can also turn into a disadvantage. This is because many investors who lease trading strategies rely on their emotions to decide when to start or stop trading a strategy. And here, two scenarios emerge. The first scenario is an investor who has launched a new trading strategy, witnessed exceptional performance in the last month, and becomes exhilarated about all the money they could have made trading that strategy. Therefore, they subscribe to the strategy at the peak of equity, which is often the worst time to commence trading that strategy, only to witness the strategy's performance slump as the strategy takes a breather. Another scenario is an investor who subscribes to a strategy and struggles for 1 to 2 months, becomes vexed with the poor performance and ceases trading the strategy, only to see the strategy recuperate after they made the decision to stop operating. In both cases, we see that emotionally driven decisions can adversely affect the investor's ability to maximize their trading strategy or portfolio. Well, you might now be thinking that leasing portfolios or strategies is an excellent option for you, and you're ready to start making money by investing in leased strategies. But before you get ahead of yourself, there are a few more things you should consider. Maybe leasing portfolios isn't for you if you're hoping to get rich quickly. Trading isn't a good way to achieve this. While technically possible, it's also incredibly unlikely. Many traders have lost their entire trading account, or even more, trying to achieve massive profits in trading. We advise you not to do that if you can't afford to lose money. It's not for you either, since, in any trading style, as well as in leasing strategies, losses are part of the business. If you can't afford to lose any money, you simply shouldn't be trading anything at all. If you're someone who likes to understand or control everything, leasing can drive you crazy. There are many uncertainties in leasing strategies, particularly with the black box trading mentioned in the previous section. If you're the type of person who likes to know or understand everything and also control it, then portfolio leasing is not for you. Also, if you do not take responsibility for your own actions, we don't recommend leasing portfolios. This is a tough topic, but it needs to be said. If you want to lease trading strategies so you can blame others for your losses, then leasing is not for you. You're going to experience losses at some point. All strategies have losing days, months, even years. And you have to take responsibility in the end for the results. You can't blame the strategy developer. It was you who decided to operate that strategy. This advice also applies to life in general. Nothing that happens to you is because of you. Portfolio leasing is for you if you meet every point that we're about to discuss. In this case, it would be an excellent option for you. Okay, now that you've decided that leasing is a good option for you, it's time to talk about the markets. To determine the best markets to trade, consider the following aspects.
The volatility. Are the markets moving enough to offer you opportunities for profit without introducing hazardous or unmanageable levels of risk? The liquidity. Do the markets have enough volume and participation such that you can easily enter and exit trades even during times of market stress? Account size. What is the minimum account size required to operate in that market? Regulation. Are the markets regulated by laws that precisely define operations, security, and pricing mechanisms aiming to curb fraudulent behavior? Diversification. Does the market offer a variety of different opportunities or instruments? And correlation. Do all individual instruments in the market move in the same way simultaneously, potentially increasing risk, especially during times of market stress? Where can I rent portfolios or strategies? If you're looking for a reputable yet unreliable broker that we personally trade with and recommend, we suggest Striker Securities. Striker Securities specializes in the disciplined execution of third-party trading systems and is a well-regarded leader in the industry. They offer a variety of reliable and robust automated trading strategies and keep comprehensive records of real performance for their clients. All quantified models, strategies, and portfolios are available for auto trading through our rental and execution partner, Striker Securities. Next, you need to know how to select the portfolio you should rent. Firstly, consider your goals. What are you trying to achieve by renting strategies? Are you looking for consistent, reliable returns with low risk, or are you seeking broader outstanding returns that may involve more risk? If you are looking for consistent returns, you will prioritize strategies or portfolios with many profitable months or quarters. The returns may be smaller than one that has higher returns, but I can tell you the drawdown is lower. Higher yielding strategies may have larger drawdowns and fewer profitable months. Thus, they may be more difficult to trade. Also consider your current portfolio. Are you already trading strategies in some markets? If so, consider which markets you are trading and where there are gaps in your portfolio to increase diversification when trading other markets. If you're not already trading, choose a sector you're comfortable with. Indexes are a popular choice for beginners. Third, the macroeconomic viewpoints. Do you expect inflation to rise, and do you think that grains will skyrocket in value? Or perhaps you observe problems in the Middle East that could cause greater volatility in the energy markets. If you have macroeconomic or fundamental views, you can use them to guide which markets you should gain exposure to through rental strategies. Fourth, transparency from the developer is important. For some rented strategies, it's unclear who the strategy developer is. This doesn't necessarily mean the strategies are good or bad, but it does raise questions about credibility. Do you have trading experience? Are they respected in the trading community? Are they hiding for some reason? Who can you contact if you have urgent questions? The broker can help with general questions, but what will they do if you ask more detailed questions? Ultimately, trading strategies that share the developer's name and contact details, like a website, can alleviate some of these concerns. Next, we'll ask whether I should rent a strategy or a portfolio. If you're seeking consistent results, the best way we've found for achieving consistency is through a portfolio of diversified. Individual strategies go through periods of good and bad performance. When you rent a single strategy, that's what you should expect. It can also be difficult to trade a strategy that has inconsistent performance. If you rent multiple strategies, the results will probably be more consistent. This is because if one strategy has a period of, the other strategies could be generating profits to balance the overall results. However, there is a downside. If multiple strategies underperform at the same time, this can result in larger losses and greater downside, which is why proper diversification is important. Once you start operating, you should also consider when to stop renting the portfolio. This is a difficult question. There is no definitive answer, but there are two main factors you can consider when trying to decide when to stop trading a rented strategy or portfolio. The first factor is portfolio performance. You have to consider short-term underperformance versus long-term expectations. Trading is a marathon, not a sprint, so a successful trader or investor must focus on long-term expectations rather than short-term performance. Instead of focusing on both monthly and daily results, looking at strategies over the course of a quarter or even longer is better. Be prepared to weather some short-term losses. As you know, trading is a game of probabilities, and for the probabilities to be fulfilled, you need to take a good sample size of transactions. Basing your decisions on 5 to 15 trades in a month does not represent how the strategy will perform in the long term. You can't make accurate decisions with such limited data, so be patient. Be prepared to stay the course until you have a reasonable number of trades, which could take a few months depending on the frequency of the trade. Some strategy developers may provide details on the maximum number of consecutive losing trades or average time in loss based on historical data. This can give you a good idea of whether recent performance is within expectations. If you can't access that information, review the strategy's past performance results. How often do you have losing months? How many consecutive losing months have you had? If the strategy had 3 consecutive losing months in the past and then recovered, the current month of underperformance is likely within expectations. On the other hand, you have another factor, which is the performance of the account. Do you set a loss limit?
Most traders overestimate how much loss they can handle, especially in the beginning. They think they can handle 30 to 40% losses, but many people start to feel uncomfortable around 10 to 15%. If you are new to trading and think you can handle a 20 to 40% loss, subtract half, and you will be closer to the real loss you can handle. Over time, you will better understand your risk tolerance. Don't try to be a hero, because by trading with too much risk, you can ruin the account from the get-go. Set your cut-off limit before you start ruining or renting strategies. I've already told you that strategies have periods of poor performance and they can also fail or break, so it can be difficult to determine if a losing month is just a temporary setback towards more profits or is the beginning of something worse. Though it's not always possible to predict the direction a strategy or portfolio will take, it's often better not to make decisions about your trading when you're emotional. If you are frustrated, for example, by different losses that have happened a few days ago, or if you're excited by some profits from these days ago, this is the worst time to make your trading decisions. Therefore, define your cut-off limit before you start renting a strategy. Then, if you reach that point, stop your trading immediately, without hesitation. To regroup, don't trade for a while. That's good, because preserving capital is key and you can't operate independently if you're out of money. Another key question to consider when renting strategies or portfolios is, how can I be more successful? There is a common behavior we observe in portfolio rentals, which can result in a frustrating experience for the investor with greater losses than expected. If you overcome this pattern of behavior, you'll be on your way to successful strategy rental. This behavior pattern is often referred to as bright eye syndrome, where investors bounce from one new or trendy strategy or portfolio to the next, without giving the strategy enough time to perform long-term. This might be because they see a particular strategy at the top of the rankings that had a significant winning month, so they want to join the next trend. While this approach can sometimes work well, our research has found that strategies that have an exceptionally profitable month often underperform for a while afterwards. And joining a strategy that's performing exceptionally well isn't often a good idea. On the other hand, some investors experience a losing month and immediately leave the strategy for something else. Some strategies tend to recover, and sometimes very quickly, so abandoning a strategy after a losing month often results in the investor bearing the losses but missing the recovery. So, ultimately, to be more successful, you'll need to prioritize consistency over profits, set realistic expectations, and think in the long term. We hope this presentation has answered any questions you might have about renting trading portfolios and has helped you decide if portfolio rentals are right for you. We also hope to assist you in achieving success in strategy or portfolio rentals. Our goal at Quantified Models as a provider,
Our portfolios and strategies aim to help our clients invest their money in a way that yields solid short-term results while minimizing the risk of catastrophic losses that could erase years of positive returns. For more information on Quantified Models, our operations, and the services we provide, including the various strategy options and portfolios available for lease, feel free to visit www.quantifiedmodels.com. In the presentation, I have included 2 links to the portfolios currently available for lease. If you have any questions or want to reach out to us, please email us at info.quantifiedmodels.com. We wish you all the best on your journey of discovering algorithmic trading. I failed to mention that on the subscription webpage, you can access the portfolios available for LEASE, Iowa, Intermarkets, and Symphony. By clicking on Intermarket IA, you will find portfolios 1, 2, 3, and 4 available for lease. You might like to start with Symphony B. It requires less capital, and we have a micro version available. Here you can see the constituent markets and their performance, and a detailed explanation of each of the systems. I encourage you to browse through them and choose the one that best aligns with your goals.